beautiful out. I am sitting here with Sarah Duke, our Vice President. How's it going, Sarah?
Hey, it's going really well. I love this weather. It needs to stay in the 70s forever. Not like California, but like Colorado 70s.
It's going to drop into the 50s on Friday, but we're looking for 60s and 70s for like 10 days. It's going to be great.
I just don't like the yo-yo. I just want some warmth because it's in that in between. Do I need my winter tires or summer tires? And
Right.
I just would like some consistency and get my kid outside.
Fair enough.
That's also the goal.
I like it. Well, just waiting for a thumbs up from our producer, and we are good to go. So we are sitting here with a wonderful guest. Who are we sitting here with, Sarah?
We have Eric Masters, and he has a really amazing story. So for those of you that are listening on the app, you can also look at us because he looks like a famous celebrity, and I'm not going to tell you who. I want you to put in the comments because I think it's a spitting image. So you need to get on our K4CO Radio Facebook or Instagram, YouTube, because it's pretty uncanny. You're gonna love it.
Yeah, if what you're doing doesn't work out, you could always be like a
double.
Like a stunt double.
Yeah, a stunt double. Yes.
Exactly.
So we have Eric Masters, who is the Executive Vice President of Five Rings Financial and the founder of Master Plan Financial. Yep. So, man, you are a financial whiz in all regards. You've been doing this a hot minute, but you've had quite the career and lots of different ventures. So let's start with that, like where you're from and all your different career and experiences.
Absolutely. I definitely have a varied background, that's for sure. Well, first of all, let me start by saying I'm grateful to be here. Thank you very much for having me. I'm really excited. This is going to be a lot of fun. And then now you just want me to talk about myself?
Yes,
Yeah,
I do.
Right.
Exactly. We already know each other.
Yeah, you already know each other. Well, originally I'm from the great state of Ohio. Shameless plug, go Buckeyes. National champions. Got to bring that up.
But for me, as long as they're not Nebraska, we're good.
You know,
so
yep. Nope, nothing with Nebraska. I grew up there and I started college there at a place called Bowling Green State University. And yes, there's a Bowling Green in Ohio and in Kentucky, which some people get confused on. But if you've ever been to Bowling Green, Ohio, it's in the northwest corner of the state, kind of close to Toledo, right in between two Great Lakes. And it's very, very flat. So it's very, very windy there. Mm-hmm. Ohio's a great place to be from. I learned a lot. I'm grateful to be from there, but I couldn't wait to get out of it. And so I actually finished school at Oregon State, and I studied forestry there. If you've ever been to Oregon, what the climate does there to the forests, it's absolutely amazing to study, but that also means it's gray all the time.
Lots of rain.
And so moving from Ohio to Oregon, I really wanted some sunshine. So I didn't know what to do with my life. So I had some friends from Bowling Green call me up, and they were living in Breckenridge at the time, and said, "Hey, we have a room opening up. You want to come and move in with us?" And I said, "Well, why not?" I didn't know what I was doing with my life at the time. I'm a former chef as well, so I started in a kitchen when I was like 13, worked my way through college, and then, as you can imagine, being a snowboard bum and a chef kind of go well together. Mm-hmm. Ride in the morning, work in the evenings. And then I landed a gig with a company out of Manhattan, and I started doing large-scale catering events. So the majority of the time, and it was always during the mud season in Colorado, so May, June, September, October, where there was nothing going on in the mountains anyway. And at that time, I basically just traveled around the country and did these large-scale events. The majority of them were with the pro golfers, the PGA. And so it's really not an exaggeration to say they flew me around the country to feed Tiger Woods, which in my 20s was fantastic. Work all day, take a little nap, do it again, no big deal.
Are you going to share some dirt on Tiger Woods? Because I would appreciate that.
Trust me, I have stories all day from that time in my life.
How about what was his favorite food? We won't sling dirt.
Well, no, I don't know particularly his, but some of the funnier stories are I almost got in a fight with Hootie and the Blowfish.
Okay.
I spent 3 months in New Orleans after Katrina helping rebuild. I've done James Taylor's 60th birthday party.
Cool.
So very cool
Nice.
events that I did back then, and it was really fun until one day I woke up and I was 30. And I thought, what the heck am I doing with myself? I can't do this forever. If you know anything about the restaurant business, it's an extremely tough life. It's very stressful, and no weekends, no holidays. And I finally decided to grow up, I guess, and decided I didn't want to do that anymore. And so I moved down to Denver in 2008. And that's when I decided I needed to change my careers. And the reason I changed my career is because of my mom's personal story. Do you want me to get into that?
Absolutely.
So my mother in 2002 passed away from cancer, and we found out a month before she passed. So it was a very rapid thing. She was 44 years old. I was a snowboarding chef. I didn't know anything that was going on. I went home. I found out. I came back, put my stuff in storage, went home. She passed away. It was hard, still is. But I at that time I was 22 and my sister was 18, and she was just starting her her undergrad, and I was being a goofball in the mountains, and so she had left my uncle and I, or my sister and I, $100,000 from a life insurance plan that she had through work. Well, as you can imagine, giving $50,000 to a snowboarding chef is probably not the best idea.
Probably not.
You know. So what she did was make my uncle the trustee and my sister and I beneficiaries. Which, if anybody listening doesn't really know what that means we had no control of the money, and then come to find out later, any legal right to know what he was doing with our money.
Right.
So this is where the story takes a little bit of a turn. Fast forward 6-7 years later, my sister's married, working on, I think she was on her residency at the time. I was getting my life together. We decided we wanted control of our money. And my uncle said to us, I'll give you control in 6 years. And that's the same face I made.
Yeah.
I didn't understand that was such an arbitrary number. Like, that's not when we turned 30. That was, okay, why? And I had to think about it. And then I realized that was when his youngest was going to graduate college. So we were not able to, like I said, legal right to know what was going on with the money until we got an attorney involved. Once we got the attorney involved, we figured out that there was no way to press criminal charges because there was a vague clause in the will that said reasonable stipend for services. But once we got into the bookkeeping side of it, we realized he was leveraging our money to put his kids through college. Through that process, we also got to find out all of the different things that the advisor that he was trusting was doing with the money. And keep in mind, I was a snowboarding chef. I didn't know anything about anything at this time.
Right.
But I learned an awful lot. The hard way sometimes. Sometimes that's how you have to learn. So I basically at that point decided I needed to change careers anyway. I wanted to become more professional. This kind of led me to the point of one of the reasons I was in the kitchen is because I knew I could work anywhere. Then I kind of got to the point with this was, well, there's got to be millions of people out there. I have a college degree. My sister's a doctor, but we didn't know anything about money. We were blue collar Midwest people, and our parents weren't wealthy by any means. They didn't teach us anything. And so I kind of had the light bulb click on and realized there's got to be millions of people out there like that. Well, how do I get into this industry, and how do I help people avoid what happened to my sister and I? That's literally my motivation to get into the business.
So throughout all the research, it just kind of gave you kind of like that push to enter this career.
Absolutely. That's
Right.
exactly what it was. Again, not knowing anything about the industry whatsoever. And also being a snowboarding chef in Breck, sometimes you don't know what the outside world looks like. So this was 2008.
Right.
Good time to change your career.
It's a good place to be secluded, though.
Yeah, it is a great place to be.
Breckenridge, Colorado. is
Great place to
beautiful.
be in a bubble for sure, but sometimes you miss out on what's going on in the real world.
Yes.
I wish I did in 2008.
Yeah, that was a fun time.
Well, come to find out, that wasn't the best time to change a career, but anybody in the financial business was hiring. So I went and bounced around for about 8 months with some of the bigger names in the industry, some of the names that everybody's heard of, and I just never found a fit. There are different models out there, and no slight on them. They built billion-dollar businesses and with these models, but it just didn't fit me. I didn't play politics very well at the time. I've learned to develop a filter.
That's a shame.
Oh, don't worry, it can come out. I just couldn't find a fit. And then I'll never forget the day that changed my life. At that time, health insurance was a different game before the ACA came out, and Obamacare, whatever you want to call it. And at that time, I went and I answered some job posting and went in and I met with a gentleman who was selling health insurance for a company that no longer exists. And like I said, I'll never forget this day. I went in and met the gentleman, and he had his manager with him in his nice fancy suit and, looking the part of the traditional industry person. And I walked out of there and it was the weirdest thing ever. My gut told me there was something about the guy, but my head told me don't work for that company. So I didn't right away. I ended up going and working with another company that may or may not quack at you, which they have great products. I actually own some of them, so I'm not slighting them at all. I just wanted to offer more to my clients. So about a month later, I went back to the gentleman and I said, hey, I think I'm going to come work with you. Mm-hmm. And he said, you just made the best career move you've ever made, and you didn't even know it. And I said, what are you talking about? He said, well, in that month, he was hired on by 5 Rings to teach their agents how to sell health insurance as a door opener for everything else we do. Because back then, health insurance was a different ballgame.
Right.
And I said, 5 Rings, what's that? And I went in and I met our CEO, Mike, and I met our founding partner, Lyle. And I went to one of our Money 101 classes, and 15 years later, here I am.
15 years?
Yeah.
Wow. So you do like it a little bit.
I love what I do. I'm very lucky to be able to do what I do for people.
That's amazing. I truly love the personal stories when they integrate with someone's entire world. Mm-hmm. I find that so fascinating, and the passion and the mission and the drive to me always is stronger within the person. If it's something that happened to a family member, it just catapults your life into a different world. And a lot of times it can be the valleys. It's very rarely the peaks when it's like, man, it was my wedding day or when my kid was born and everything just shattered and I knew what I was going to do. It's more like, boy, that was really hard. And how can I go help the world? So it's great to turn that moment into something positive.
Thank you.
So, well, I love that story. So
I appreciate
thank
that. You got to find the balance in things, right?
Yeah, of course.
You can't have light without dark. So there's positive and negatives to everything. Yeah, I miss my mother, but if it wasn't for that, I would never be here helping people the way I do.
And there are so many millions, if not billions, of people in this world who have no idea how finances work. And it's truly, I don't know if it's no fault of theirs, but it's kind of sometimes how the system is. Like looking back on my schooling, I wish that I had more kind of real life experiences. Like start with, how do you balance your checkbook?
Right.
How truly, I'm teaching my kiddo who's 6 what interest is, what a loan actually is. And people who have wealth or no wealth, how is a trust actually formed? And what power do you actually have? Because that is very convoluted. And it's like writing a will. Sometimes there's just so much information. Same with buying a home. It's good to have someone and an expert in the field to go through it and actually explain what's going on in your world.
Well, it's necessary because we're not educated in these things. To your point, the system itself doesn't necessarily want us to know all of those things.
No.
For sure. There are a lot of pitfalls that they, exactly, want to get you in certain ways, which is unfortunate. That's how people get a little screwed over. I was looking for words of not to say that, but there we go. Well, I know you liked 5 Rings. I know it sounds like you really liked this gentleman that you met. And I know 5 Rings has a different model than other financial institutions. Yep. Explain a little bit what makes you all unique.
Absolutely. One of the things I have to explain to people right off the bat is I am not a financial advisor. And most people, of course, when you see financial, you assume that's what I do. Most people have a generalized idea of what that world looks like, but
everyone thinks of stocks and bonds and
401ks,
the market,
mutual
401ks,
all
exactly,
kind of
S&P,
yep, exactly. We work in a very different niche, a very specific niche in the financial world. So I hear it all the time, and I love it when I hear this, is you're not like any financial guy I've ever met. So, great, thank you. I appreciate that. I have nothing against that side of the industry, but I consider that side of the industry to be the risky side. You know, like you said, stocks, bonds, they're not necessarily bonds, but stocks and mutual funds, they can go up and they can go down, and the market's very volatile, and you can make money or you can lose money.
Especially now, it's quite volatile.
Especially right now.
I mean, everybody knows that. Everybody's seeing that.
I mean, it'd be hard for you not to be at least hearing about what's going on right now, even if you don't follow it. I hate watching the news, to be honest with you, but because of the business, I have to. And every single day I wake up and I'm like, wait, what just happened? So yeah, that's a little bit of a side note. But I work in a very specific niche in the financial world that I consider the protection side of the business. And a lot of what I do, I feel like, is the foundational piece for the majority of people. Our company focuses on helping middle Americans. And so our goal is to teach people ways that they can grow and protect money they've accumulated and guarantee them never to lose the money due to the volatility you're talking about. So none of my clients in my 15 years have ever lost a dime due to market volatility.
I find that amazing. I want you to say it again. Everyone that's like, I mean, if we aren't getting people to pop over, that's amazing to me.
Yeah, I think I misheard it.
You know, a traditional advisor is not legally allowed to say that, but I am. And yes, I work in a piece of the business where I help people grow and protect money that they've already accumulated in ways that are guaranteed never to lose due to market volatility.
Okay, how? That's what everyone right now is thinking. How can you guarantee?
I've never heard that before.
Listeners are just
of course. How can you guarantee that I will never lose money?
Yeah.
So the products and systems we work with are we call them indexed accounts. So I guess let's step back a little bit and do a little bit of education piece on it, because we do really feel like we're an education-based company. And I mean, I go to networking events all the time, and I hear the commercials on TV from the traditional industry, and they all sound like Charlie Brown's teacher to me. Like, They really do. We're going to take a holistic approach to want, right? The producer laughed. And that's fine. Like, again, I'm not against that side of the business, but because of what part of the industry they're in, they can't say guaranteed never to lose.
Right.
So what our products do, we basically, and this is a very generalized statement, there are many different kinds of these, but we call them indexed accounts. Okay. So for the people listening, let me kind of explain what an index is. We kind of touched on it earlier. You've got the S&P 500, you've got the Dow Jones, you've got the NASDAQ. Those are all different indices. Okay. The one you hear about the most is the Dow Jones.
Right.
Did you guys know that the Dow Jones is only 30 companies and they're only in the industrial sector?
I didn't know they're only industrial.
Dow Jones Industrial Average.
Okay.
So does that make it more easy to manipulate that index?
Probably.
Company's not doing so well, they pull it out, they put another one in. I typically try to use the S&P 500 to credit my interest for my clients. The reason why is because it is 500 companies,
right,
and it's 100 different industries. So I feel like it's a better gauge of what's going on in the world right now, in the country at least. But it's also outperformed the Dow since its inception. So,
which kind of makes sense when you look at the differences between them.
Exactly. So we basically use indexed accounts that, I guess the best way to put it is, if we're talking, let's say, an old 401k or an IRA or a TSP, something like that, those typically have mutual funds or stock products inside of them, which are more or less part of the index, inside of the index. Make sense? My accounts actually look at the indexes in entirety. So it's not inside of the index, which is how we can guarantee no loss. Because basically, the index goes up this year, which is another thing my clients love, is it's not a daily, weekly, monthly thing. We don't have to watch it. Well, once a year, we'll get together and we'll look at, from May 1st to May 1st, this is what the index did. This is the amount of interest we're going to credit you. I've been warning everybody with my annual reviews lately that next year I might be telling them they're getting a 0, but isn't a 0 better than losing money?
Definitely.
You know, something else I teach people is making up for loss. I'm gonna test you on this one, Sarah.
Oh man.
All right.
Here we
Put
go.
you on the spot.
Okay.
All right. Let's say we have $100,000
Okay.
and we lose 25%.
Oh no, this is
No.
to Josh.
Okay, Josh.
No, percentages aren't my thing.
All right. All right. So $100,000, we lose 25%. Where are we at?
75.
Okay. Then we gain 25%. Where are we at?
It's 25% of 75.
Correct.
Oh,
Not
now
at
it's getting a
100.
little
Yeah.
too much.
I already knew it was going to
It's
go.
a-
I know you're not at 100.
It was it. Okay. It's a trick
I know
question.
you're less
The
than
majority of
100,000.
people I speak with say, "Oh, we're back to even."
No,
No,
you are not.
that's
You are
not how
less.
it works. So with
Exactly.
the volatility that's going on right now, in that example, if you lose that 25, well, to break it down for you, 25% of 75 would put you back at 92,500.
Right. Okay.
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 So to get back to even, you actually have to have a 33% return to get back to 100. That's how making up for loss works.
Right.
But most people don't think about that way.
We know the concept because, you and I both like to gamble. So,
Our gambling is like
Blackjack
$1 up to maybe 10. So I don't really care and factor in percentage. 'Cause- yes. But to your point,
so it takes
that's very
33%.
exactly because you think 25% of 75,
Right.
And you take what's bigger, what's smaller. Et
Well,
cetera.
what if we never have to make up for loss?
And that's what I'm trying to get my head around right here.
So in years that the market adjusts, is what they call it, or tanks, whenever you want to, depending on what you want to look at. When the market goes down, my clients sit back and relax and get a zero. They
Okay.
don't lose any of the money they've put in. They don't lose any of the interest they've earned. They just didn't earn any interest that year.
Okay. Which is great. It was protected, and you just said you were in the protection game.
Exactly.
That's pretty amazing that you can guarantee that. I love it. For those of you just tuning in, if you just missed it, you need to hear it again because I find this amazing. We have Eric Masters. He's the Executive Vice President of Five Rings Financial. And I know if you're watching on Facebook, you see his phone number, but I'm going to put it out here just in case. 970-389-4798. You can also email him. It's Eric, that's ERIC, at themasterplanfinancial.com. Of course, the website is the same, themasterplanfinancial.com, and you can look at all the different products and services. We're going to go into more detail, but I think the key point is to protect your money, especially I have this conversation without exaggeration every day, that it is very volatile and it can create, when it isn't stable, it creates fear, right? I mean, through COVID, we had fear. 2008, we had fear because you don't know what tomorrow holds.
Exactly.
Especially when you mentioned the Dow drops 1,200 points one day and then it's up 1,000 points the next. Like it's so crazy to try and get a handle on it. And for those of us, I'm like you. I don't want to watch the news anymore.
Right.
Because things are changing too quickly and I don't like the heart palpitations.
Right.
So I'm like, I'll check in a month and see where we're at.
That's
but
what they want you to do, right?
to check in a
No,
month.
yeah, they don't want you to pay attention.
Yeah,
Just saying.
exactly.
I have these conversations enough in
Yeah,
my
okay.
other worlds that I have a pulse on it,
Okay.
but I'm protecting the wealth.
Sure.
I am very much of that mindset. In my 20s, risk
Sure.
all the way. I didn't care. I'm not going to live to be very, very old, so I didn't care. And now I have a kiddo, and now it's like, no, I actually need to have a handle on it and really understand the market. So I like the protection growth model. Exactly.
Yeah.
I mean, I think that reassures people it's anything above zero, which is amazing that you can guarantee it.
Absolutely. We've got different types of products. I'm not, and I said this about the other side of the industry, I'm not anti-diversification by any means. I believe that there's a time and place for that. The majority of people I speak with don't have a big portfolio. They maybe have a 401k. They maybe have an IRA. That's your foundational piece.
That's a great question do you have barrier to entry? Can you have, what's kind of the start up to max? Do you have any limitations with that?
Not really.
Okay.
There are. I'm independent, which is kind of good, important to know that I can look at any any products that are on the market, rather than being a captive agent that has to sell this company's products. So I am very grateful to Five Rings model. We have different companies that work with us that their entire job is to make sure we have the best products on the market. And so if something doesn't fit in our normal box, I have places to go and find other ones. So, my favorite product, sure, it's a minimum of 10 grand, but if there's something less than that, I have a place to go with it as well. But then we've got other products that are $100 a month or $50 a month. So to answer your question, not really limitations. I like to meet people where they are and help them where they are, whether it's a ton of money or a little bit of money.
Right.
It's your money. We need to protect it.
For sure.
And it seems like your services would be very ideal for somebody towards the end, towards retirement.
Okay.
Stuff like that. Am I wrong?
Yes and no.
Okay. Yeah. No.
So one thing I want to bring up about our services is that I'm a non-fee based service. My clients don't pay me. I get paid by the people I represent, not by my clients. So a traditional industry advisor charges you somewhere between 1% and 3%.
Mm-hmm.
Well, if you're not paying me that, then I just saved you another 1% to 3%.
Right.
And the reason why is because back to the index part where it's not a managed account. So we don't have those fees with it. So we're non-fee based, which is really cool. So to your question, I call them 5-star clients. 35 to 55, married, kids, obviously employed, maybe own a home. Okay. On the front end of that, a lot of times are people who are just getting started. This might surprise you, but the average age, and this is according to the Social Security Administration, the average age of someone who starts saving for retirement is 53.
Wow.
Yeah. So we lost a little bit of time there, but there's still some things we can do. And I've found recently that some of the younger generation is actually very attuned to this, and they've seen grandma move in with the parents or something like that. So they're paying much more attention than say my generation did.
Mm-hmm.
So on the front end of that are people that are just getting started. Where do we go? The majority of people are programmed to think I need a 401k or an IRA. Now, with a 401k, here's my suggestion. If your company is matching you, take the free money. That's 100% ROI.
Exactly.
Take it. But beyond the match, let's talk about something else.
Right.
Because there are other options. All right, we'll keep going. So do you know the difference between a qualified and a non-qualified plan?
Nope.
Okay.
Oh, no. Oh, gosh. I promise we were in the industry.
I used to. I kind of repressed all that information.
I told you we're education based.
I like it. I like it.
I'm trying to teach people things. So qualified money is money that is tax deferred.
Okay.
Gotcha.
Your 401k, your IRA, your 403b, your 457, your TSP, things like that. Money you are going to pay tax on later.
Okay.
Let me ask you a question. I know, it's my interview now. Do you think taxes are going to go up or go down in the future?
You never can tell.
Yeah.
You never know.
My guess is up.
I always think
What's
up.
your guess?
Yeah,
we are technically in one of the lower tax environments than we've ever been.
Right.
Yeah, I would assume up.
So chances are it's probably going to go up.
Yep.
So doesn't that sound like the greatest savings plan ever for the government?
Oh, yeah.
Uh-huh. Exactly.
So basically, with a qualified plan, 401k for IRA, you are waiting until you have a bigger amount of money, big pile of money, to pay a higher amount of tax.
Right.
Yeah.
It's an awesome plan for the government.
Oh, yeah, definitely. And
Right.
they can raise it to whatever they want.
Is that the best plan for the client or for the individual? Maybe.
Right.
401ks are actually being used now differently than they were developed, but that's a different story. Non-qualified money is money you've already paid tax on. Income, inheritance, capital gains, things along those lines. So if we structure it properly, we can grow the money in a tax-deferred environment, but then access it tax-free down the road and never have to pay tax on it again.
That would be lovely.
Mm-hmm.
I agree.
I
don't
love
want to
teaching
give.
people this stuff.
No, it's amazing. Yeah.
Speaking of which, the education piece, you're really big on the education piece. And earlier you said when you met the people of Five Rings Financial, you went through something called Money 101.
Yep.
Tell us about that.
So Money 101 is, we call it Money 101 because it basically is like your first year in school where it's your very basic beginning fundamental principles that revolve around money.
Finances for dummies.
More or less. We break it down on a very elementary scale. You know, we've all heard of tax deferral and compound interest and things like that, but maybe don't really understand how it works. So in the class that we teach, the Money 101, we teach people these very fundamental principles like the Rule of 72. Have you heard of that one before?
I have not.
I had never heard it before I started either. So Rule of 72 is a mathematical formula that tells you how long it takes your money to double. Math, not speculation. So you take your interest rate, you divide it by 72, and that's how many years it takes to double. So let's say we have $1 at the bank earning 1%. How many times does 1 go into 72? Come on, Sarah, you can get this
72.
one. Yeah, right, you can get that one. I'm making it easier on you.
Thank you. I know percentages. I didn't know how long that was going to go. I'm like, nope, I'm bowing out.
So if we have $1 earning 1%, 72 years later, it'll turn into $2.
Okay.
Here's some free advice. Stay away from 1%. I mean, how many 72-year periods do we have?
Exactly.
I'm hoping for one, right?
Yeah.
But you'd be amazed at how much money is in 1% accounts right now. Because people don't know any better. They're not educated on this.
For sure. I think about my checking and savings and CDs, and all of them have remained low since I've been on planet Earth. I mean, unless you get really lucky at, a 3-month CD or something. But
And not
it's
to
rare.
mention after 2008, after the crash and everything like that, CDs were about 5.5%,
Sure.
sometimes 6%. And then people were actually putting money in CDs paying like 1.5%, and it's just like, really? Do you know how much you're making on this in
Well, it
1
goes
year?
back to the education
Well,
piece.
true.
What do you do if you don't know? You do what grandma and grandpa did, or you do what mom and dad did. And where do most people go with their money?
Right.
They go to the bank,
Exactly.
right? And so, I've got an indexed account right now that can guarantee 7.2% every year, regardless of what the market does,
That's amazing.
which means it doubles every 10 years.
Nice.
Wow.
Guaranteed.
So this class, it's Money 101.
Yeah, sorry, back to that.
No, you're fine. I love it. You're very educated. It helps. How often is this class? How do people sign up for it?
Absolutely. The best way is to email me or call me or text me. We do 2 a month in the Denver area. One's off of 120th and one's in downtown Littleton. Those are our in-person classes. And if anybody that's listening, here's your chance for a free prize. If you decide to come and join us, I'll buy you dinner.
Ooh,
Oh, there you go.
Where's dinner?
Does that really matter?
Yes.
It's at McDonald's.
To me, nope.
No,
No,
it's not
I
at,
say exactly.
It's not at McDonald's.
She
Okay,
likes
cool.
steak.
I do. I'm always looking for like Shanahan's.
It's not a.
Del Frisco.
We always joke about it's not a plate liquor dinner at Shanahan's or Ruth Chris or anything like that.
Okay,
Right.
all right.
It is at a very middle class, very local restaurant that takes very good care of us, and their food is very good.
I love it. Cool. I'm down for Chili's and Red Lobster too. That's awesome.
It's a step up from that.
Okay.
Former
awesome.
chef, remember?
Yeah.
I don't do
that's
chains.
true.
No,
That's
no.
true. Okay.
Before we go into it, what's your best dish?
Prime rib.
Prime rib.
Ooh.
Nice.
Okay. I have 2 people who would love a good prime rib. Just saying.
I can teach you. It's a very easy recipe.
Nice.
Oh, you're not teaching me. Oh, no. I'm learning pancakes. I am very, very basic. Cool. Well, I wanted to go into, I know you've touched on the 401ks, IRAs, and we kind of covered tax-free retirement-ish. Is there anything else that you wanted to get into? Because I think that's a big piece of it that we haven't covered.
I think right now, talking about protecting people's old 401ks, not your current employer, a former employer, because I run into people all the time that have them from a former employer just sitting out there and they don't even know where they're at or what they're doing. Those are, and in any traditional IRA or Roth IRA, because of the volatility that's going on right now, it's a qualified plan. You can't touch it till you're 59 and a half.
Right.
Why not put it somewhere where you can't lose any money until then?
Right.
I mean, yes, I'm a little biased. This is what I do, but that just makes common sense to me. Go up when the market goes up. Don't go down when the market goes down. Why not? Why not do that? The tax-free indexed account, we use that for a lot of different things. It's actually one of the most powerful financial tools on the market if you know how to use it correctly. I have clients that use it for retirement income, which is tax-free retirement income. I have clients that use it for college funding for their kids. I have one client that leverages it as almost we call it infinite banking. So basically, he has put a bunch of money into one of these accounts, leverages it because he's a real estate developer. I think he puts 100 grand a year into one of these. And he goes and he pulls out 50K, buys a property, fixes it up, flips it, put the money back in. So he's leveraging his own money rather than borrowing it from a lender and paying interest on that. So it's really one of the more powerful financial products and flexible products that are out there if you know how to use it. In fact, 70% of the money that are in those accounts are owned by the top 5% of earners.
Yeah, I'd rather go into my own pool that's making money than, of course, going to take a loan out of a bank. It's very financial savvy.
Well, and it comes into play
Financially
for college funding also because a traditional 529 plan, anytime you have kids going to school and you are applying for FAFSA grants and loans, they're going to look at all of your assets and say, okay, you've got this and this, spend that first, and then we'll give you money. This stuff is not reportable. It's not reportable to the IRS. It's creditor proof. It's completely hidden. And so what my clients do is they take the grants and loans when the child goes to school, and then 4 or 5 years later, however long it takes, then they go back and pay it off. So they're leveraging the money because on average in the tax-free account, they're earning 7%. They're usually only paying 1 to 2 on the loans. So why not earn 5% and then go back and pay for it?
I didn't realize that about a college invest account, the 529, that you have to show your assets.
Yeah.
That is required.
Not necessarily with the college invest account. Those are 529s.
Right.
But that is an asset that is reportable while you're going through the FAFSA process.
Okay.
And so they are, when you apply for the grants and loans, they are going to see the 529.
Okay.
And then they're going to say, well, you got to use that first.
I gotcha.
I'm actually working with a client right now who started a 529. I believe it was for her grandkids. And now she, kind of wants to move it into something else. She doesn't think they're grown and they may not be going to college and that kind of thing. 529s are only used for college.
Right.
If you use them anywhere else, you get a 10% penalty and tax on it. She's willing to do that so that we can leverage it into something else for them down the road. But, College Invest is a good company. It's not a bad concept, but the tax-free account is flexible. You can use it however you want. It doesn't. What if your son or daughter becomes a YouTube star, and doesn't go to college? I spoke with a client last week who has a plumbing company, and he talked to me about how much interest has been growing in the trade services rather than people going to college because you get paid very well in those industries.
It is. We talk about that a lot. Back when we were growing up, it was you're going to college.
Yeah,
it's
me
a 4-year,
too.
that was the path you're going to. And you can make a much better income going to a trade. You learn for 2 years and you're automatically in the workforce. And these plumbers and electricians are pulling in 6 figures their first year and they're 20 years old.
Yeah.
And now a lot of us are doing things that we didn't even study in college.
I would say most of us. Exactly. Most of us are. What is the process for those that are in other products and services?
It all starts with a conversation.
Is it challenging to swap and pull money? Okay.
So it's called changing custodians. Basically, a lot of times I explain it to people like this: the qualified, non-qualified we talked about. Imagine them as garages. I can change the car in the garage, no problem. No penalties, no taxes. If I switched from one garage to the other, then that's a different story. So literally moving an old IRA is literally nothing more than a little bit of paperwork and a phone call, and then we get the money moving over. It's just changing the car in the garage, just changing the custodian of the account.
Okay.
No big deal.
Okay. That's good to hear. I do have a college invest account for my kiddo
Okay.
that I started, I think, about 6 years ago. So I'm curious because I haven't read in depth if it really doesn't. I think some of them have a little wiggle room of going to a trade school-ish, or in some middle school and high schools are starting to accept it because it's the same, platform that we're now in of kiddos aren't going to college.
Yeah.
So, but Yeah, I'd be very curious about moving
And
it
I'm
over
happy
to
to review it for you if
different.
you want
Thank
me
you.
to. Reading that paperwork can be brain damage.
Oh, it
Luckily,
is.
I can scan it pretty quickly.
I
Figure it
appreciate
out.
that. It is brain damage for me for sure. Very nice. Sorry.
Are there any types of funds that your setup, the services that you do, would not allocate for? I mean, for example, college funds. You guys can take those funds and manage those. You can manage 401ks. Are there any that would not work
Well,
for Five Rings Financial?
short answer, no. But back to your point, college funds, there is a 10% penalty if it's not used for colleges, for college or trade, or if that loophole exists.
Right.
Brokerage accounts can be a little tricky. I'm working with a client right now who's got a pretty large brokerage account, but she's 10 years away from retirement and she's scared of the market right now. So, here's the question. Can we mitigate the capital gains on that so that you're not paying as much? Maximum you're going to pay is 20%, but you only have 10 years left. If going back to making up for loss, if you lose a bunch of money, do you have enough time to make it back up in the 10
Right.
years? That's the crystal ball that none of us really know right now.
Right.
So there are challenging products and funds out there, but there's always a way to do it. It just matters. It's going to be determined on whether or not there is any kind of penalty or taxation on it.
Okay.
And do you work with business owners as well?
I do. Yeah. I
Okay.
work with a lot of business owners in a lot of different ways. I love helping business owners. I can do so many things for them that, again, you guys have already not heard, you've never heard what I do before anyway. Like what I can do for them is even more impressive. So I can help set up simple IRAs as an alternative to a 401k that's in that index situation, which costs less for the employer, guarantees no loss for the employee. A lot of times I work with business owners to do buy-sell agreements or key man policies or executive bonus kind of policies. You've got an employee that you love and you want to keep them there. So we can, do an executive bonus kind of situation that would keep them not necessarily tied to the business, but more grateful for the business because they're doing those kind of things.
Is that not taxed as well?
That can be the tax-free part. Yep.
Awesome.
And that part, I'll tread lightly on that just because it depends on how the business is set up, whether it's a sole corp or a S corp or a
Like LLC type of thing.
LLC, or there are different rules regarding how the business is set up. So
Okay.
that's a very general statement. Don't hold me to all of that. But there's a lot of different ways we can help them. I actually have another way that I can help business owners add health benefits to their company, which is no cost to the employee and no cost to the employer, and it actually adds tax benefits to the bottom line of the business. And it doesn't change anything they're already doing as far as their major medical stuff. It's for the people, the employees who don't opt into those major plans.
I would think your phone is ringing off the hook.
I put it in airplane mode right now.
Like that. This is amazing. I've never heard of anything like this.
I
really.
told you I'm so grateful and lucky that I found this little niche that no one's ever heard of. So I get that question all the time. How come my advisor never told me this?
Right.
Well, go back to the
Right.
comment about being non-fee based.
Exactly.
They make their
getting paid.
fees differently than I do. They swim in a different pond, and again, I like that pond for certain reasons, but they don't focus on my side of the business, so they undervalue and underestimate the power of some of the stuff we do. And because I'm independent and have the best products out there, it's fun.
Yeah.
It's just different. It's a different way of looking at it. I think what I do for most people is their foundational piece. Doesn't mean I can't, I said we work with middle Americans. Doesn't mean I have lots of wealthy clients who take advantage of this stuff. But we made a goal as a company to help the middle America population because that is a vastly underserved market by the financial industry. And that's where I came from. That's where, I'm still blue collar.
Right.
I mean, I'm
For
from
sure.
Ohio. I still got a little red in my neck. Come on.
Yeah. Well, that is the niche here in Colorado. That's really who we serve, who we want to go after,
Yeah.
like the small and medium-sized businesses.
Mm-hmm.
There are 700,000 here in the state of Colorado.
Yeah.
That is the backbone of who we are.
Mm-hmm.
And I think when people think, you're shopping at these big places or investing in these big places, I'm like, the people that are supporting them are these small to medium sized businesses. And it's
Absolutely.
they need a ton of help and encouragement and education and everything that you're after. I wanted to go into also clients' living benefits. Will you describe that a little bit?
Oh gosh, we haven't even got to that part
I
yet.
know. I want to make sure that we do.
Okay, great. So living benefits is honestly one of the most amazing things that has ever been introduced to me. I told you my mother's story about passing away from cancer, so I've lived through that. I saw it. I lived it. It sucks. It's not. It's not something we all plan for, but we need to be protected against it. So what living in it, and I tell people all the time, whether or not you're going to do the financial piece of the business with me, at least look at living benefits to protect all your other assets. What's the number one reason for bankruptcy, home foreclosure, or business foreclosures?
Ooh,
Statistically.
I hope it's not death, but I feel like you're going in that. It's not?
Nope.
Okay.
Job loss?
Nope.
The number one for bankruptcy and closure. Running out of
Disability.
money.
You're both close. Medical cost.
Okay.
Someone getting sick
Mm-hmm.
and then spending all their money, all their assets to get better. And then they're better, but they have no money. That causes a lot of problems. And that's a Harvard Law study. That's not me.
Right.
So I told you I'm on the protection side of the business. I have to protect you from the most dangerous threat to your money,
Which is medical.
which is you getting sick.
Right.
Right? So what Living Benefits does is allows my clients, basically it creates a large reserve or big pile of money, if you want to look at it that way, that they can access if they get sick. So let me tell you a story. That sound good?
Yeah.
I don't know where we're at in time.
You're-
Oh, we
you're
got time.
great.
Okay. So the living benefits protect you against critical, chronic, and terminal illnesses. Those are catastrophic situations, right? So the critical piece, that's the big three. That's heart attack, cancer, stroke. There's 18 other triggers under there, including Alzheimer's, loss of limb, loss of sight, burns, paralysis, coma, head trauma, and a bunch more. Based on the severity of that event and how it affects your life expectancy, the companies will cut you a living benefit. You can make a living benefits claim, and they will provide you a check while you're going through that. So here's my story. I met a woman 13 years ago at a networking event. She did property casualty insurance, which is home and auto. So obviously understood the importance of protecting these things. At that time, she had 2 little kids at home and she was single mother. So she realized she had to, protect the family from that situation. So she ended up getting 2 different living benefits policies with me. And I won't get into all those details, but there's a reason why we did 2. It's a blended situation. Fast forward to I think it was about 5 or 6 years ago. She called me up and said, Eric, I'm in my early 50s. I found out I have breast cancer, but don't worry, they caught it early, and I'm going to be fine. After 13 chemos, 6 radiations, and 4 surgeries. If you are going through that, are you working?
No.
Probably not.
Probably not. Yeah.
Probably not. So a lot of times, this is where the bankruptcies come in. People end up in that situation and they can't work, and boy, that just ends up a bad situation. So this woman called me up, told me the story. One of the living benefits policies was $250,000. Based on the severity of her breast cancer diagnosis, we were able to provide her a check for $110,000 while she's going through all of that. By the way, that's tax-free. She doesn't have to pay it back, and she can use it however she wants. So at that time, the kids were just going into college. So she used some of it for, cost of living,
Tuition, yeah.
but some of it for tuition as well, because she can use it however she wants. Then, fast forward to April of last year. So the second living benefit is a terminal illness benefit. If you get diagnosed with 2 years or less to live, you can access up to 90% of the reserve. She, in April last year, kind of bamboozled me a little bit, to be honest. She's, like I said, in the insurance industry, so she called me up and said, "Hey, it's time for our annual review," which I do with my clients at least once a year. And I went and met with her, and she said, "I'm sorry, I didn't tell you the whole truth of why we're meeting. The whole truth is because the cancer's back, and it's stage 4, and it's in my bones. So therefore, it's a terminal illness situation." That was April of last year. We did a lot of end of life planning. She had herself set up pretty well financially. So what we had focused on was spending down all of her taxable assets so the tax liability didn't pass to the kids. The money in the living benefits, the other policy, which was $350,000, she wanted that to go to the kids. But it was nice to know that depending on how long she was going to be with us, she knew that she could get that if she needed it. Unfortunately, in January of this year, I got a text from a random number, and it was her son who said, "Hey, Eric, I need to let you know my mother passed away. We need to initiate these claims." So I'm getting goosebumps. That was my first, and I haven't told you this part yet. It's on the chassis of life insurance, which is kind of interesting. How do you think about life insurance? If someone dies, someone gets money, right? Well, living benefits are an acceleration of the death benefit. So if someone gets sick, they pay you your life insurance benefit while you're still alive. So it's a different type. It's the new kind of life insurance, completely different way of looking at it. And so that's how we were able to accelerate the 110,000 6 years ago. With this one, that's how we would have been able to accelerate the 300,000, but she didn't need it. She unfortunately passed away. This was my first death benefit claim in my 15 years. It affected me. It was emotional because she and I had talked about she knew my mother's story and knew that her kids weren't ready for this. And so she made it very clear to me that I need to be there for her kids, which that was a very heavy conversation. But how grateful am I, once I got through the emotional part, how grateful am I that I met her 13 years ago and that she set this up and that I was able to help her when she went through breast cancer. And now I'm going to be able to help change generations of her family because I'm helping the kids do this too. So that's 2 of the 3. The other one is a chronic illness benefit, which basically looks and acts. It's a good alternative to disability or long-term care. Similar qualifications. If you're confined to a facility, then you can access 2% of the amount on a monthly basis. Again, tax-free, don't have to pay it back. So I'm a snowboarder. I go up on the hill and I bust my hip and I can't get out of bed or dress myself. I'm also self-employed. That's a bad place for me to be.
Right.
Well, if that were the case and I was in a facility, then I would be able to access my policy while I'm getting better. So that's living benefits.
Okay.
So that's the umbrella over all of your other assets so that if something catastrophic happens to you, everything else is protected. How's that for the protection side of the business?
It's pretty amazing. I've never heard it phrased that way. I caution how I'm going to say this, but I love that it came full circle. That, you saw maybe what could have happened in your personal world and that you were actually able to change it for someone else for the positive. That's why you got into the business.
That's why I'm in the business I'm in. And
that's pretty amazing.
So lucky I found my lane.
Yeah.
To be able to do this for people.
I love it. What a gift that was to that family. Completely. I wanted to make sure we got into this last bit.
Okay.
I know you have some amazing future goals with Five Rings Financial.
Absolutely.
Trying to build up your team. Kind of tell us what you're looking for, what the future holds for you.
Well, so Five Rings we are in, I talked about Mike earlier, and he's, I believe, been in business 43-ish years. And this is the 4th agency he's built. And Five Rings has been headquartered here in Littleton, I believe for 17 or 18 years. No. I'm sorry, like 22 years now. And everything comes from Mike. We attract like-minded, big-hearted people. The people that work with us want to be there. We don't require minimums. We don't require quotas. If you want to just be a referral partner, great. If you want to work with us on a part-time basis, it's completely up to you. I meet people where they're at, and some people just want some part-time income. Well, I can teach you easy ways to do that. So the company itself, as of right now, 22 years in the business, we're up 40% year over date than we were last year. If you go back to the very beginning, it was Mike and Lyle and just the two of them. And now we are in the neighborhood of 8 to 10,000 teammates nationwide. So we're growing very, very rapidly all across the country. I'm obviously based in Denver, but I have, teammates in different states as well that we work with. And so I thank you for bringing that up. Really, what I want to make sure people understand is that we have an opportunity to either help you build some part-time income, change your career path, build a life of your dreams. You know, we get to change people's lives not only on the client side but on the business side as well. And I'm a great example of it, because how do we go from a snowboarding chef to where I'm at now, right? It took some work, but here I am. And that's what my goal is to do for my team, is to help other people grow and build their business and their life in any way they want. And we, like I said, we have people work with us in all sorts of different ways. So, you know, what are my specific goals? Well, we get a free trip to Greece or to Mexico next year. I'd like to reach those.
Nice.
I like incentive trips for free. Those are fun.
Okay.
But really, I'm just looking for people who kind of hear our message and hear our model and really have that servant's heart to go out and help change other people's lives. That's really what we're looking for.
That is pretty amazing. You are changing a lot of lives, that's for sure.
Yeah, I'm so grateful.
Oh, that's amazing. Well, is there anything else that you wanted to mention real quick?
Not really. I mean,
Okay.
that seems like I've been talking a lot.
No, it's
I
wonderful.
love it.
We covered quite a bit. I definitely want people to check out not only your website, but to have a conversation with you, because there's so many amazing products and services that you can do. And I love that you've said multiple times that you meet them where they're at. And people are at very different spots in their journeys.
Yep.
So, I mean, self-employed, if you're employed, if you have kiddos, if you're looking to retire. I mean, what I find fascinating that you grow and protect, that you can guarantee to never lose money.
Yeah.
I mean, you don't hear that in the financial world.
I was in the financial world for 14 years and I never heard guaranteed no loss.
Yep.
I've never heard that. So that's
Exactly.
absolutely amazing.
It is pretty wonderful.
Yeah.
So definitely call Eric Masters. Again, he's with Five Rings Financial and the founder of the Master Plan Financial. And you can text or call 970-389-4798, or you can email him, Eric, and that's with the CERIC, at themasterplanfinancial.com. And definitely go to the website. I mean, it really covers a lot here. Themasterplanfinancial.com. I mean, if you want to get some education, you have classes, you get to go out for a free dinner, which sounds amazing. Education is truly like the basis of everything in this world. If people took the time to actually educate themselves and get the resources that they need, it would make the world a better place.
That's one thing I'm even grateful for with the people I meet that I don't do business with, is hopefully I taught them something. Hopefully I helped them at least think about things a little differently, maybe get them working on a different path. Like you said, it's a puzzle piece every time I sit down with someone. So if you can't tell, I'm pretty laid back. Like I'm not, all of my things are long-term plays. I'm not here to talk people into things. I want to hear where they're at. I want to put their puzzle pieces together. If it doesn't work, it doesn't work. I'll tell you, I literally told a client this morning that I think where you are with this policy is good. I don't think I can make that better for you. And so I'm, again, grateful. I say that a lot, I guess, but I just love the fact that even if you don't do business with me, hopefully I have a chance to teach you something.
For sure.
And you love the educational piece,
Yep.
which is awesome. So, and if you did come into the interview, A little bit later on, the interview will be available on K4CO Radio social media, Facebook and LinkedIn for another month. It's always on our YouTube page, so make sure you go to YouTube and subscribe to K4CO Radio. And rewatch this and learn about Eric Masters and how he can make sure that you do not lose money. That's the biggest thing. I don't know. I absolutely love it because gaining money is always nice, but losing money, that's where it really hurts on it, especially these days right now.
Absolutely.
But we really appreciate you coming in and really enjoyed it speaking with you.
Hey, thank you so much for having me. I love what you guys have going on here. I love the morning after or the afternoon the music selection you got. I'm a huge music fan. So,
Nice.
I appreciate what you guys do for the community as well.
Oh, for sure. That's why we're here. Truly.
Well, thank you very much for tuning in. This has been an interview with Eric Masters, and definitely check it out on our social media, K4CO Radio. Do know that coming up at 7 o'clock, 7 to 8, we have 1 solid hour of Colorado-only artists from 7 to 8 p.m. every single day. So thank you very much for tuning in, and have a wonderful evening.